Hi everyone, I'm going to go hit the beach after making this video, but we have a lot of potential signals. I was going to post them, but I guess I'll go ahead and before we go over the market, I'm going to run through all the signals I'm not taking tonight just to show you how powerful this market continues to be. NQ, TRN, EW, AMAT, LHO, TRUE. Sorry, there's a big list tonight. XNPT, HUM, BMRN, CYTK, MEG, TERP. So as you can see here just by looking at that, oh, DDD off the lows. So you can see by just looking at those, we have a ton of potential long candidates tonight. If you aren't fully invested after tonight, you technically, or this session, you technically could be fully invested. And if not, if you want to just set up buy stops, look at what we have building out here. ALXN, ENTJ, TG, excuse me, TYL. These are all canceling quality stocks. DTSI, Jazz, ILMN, MDVN, more speculative, HSKA, AVB, more canceling quality, STMP. So that's just to name a few. There's other potential signals in KE that I just skipped, I realized. ROG. I'm going to go ahead. There's a new long position I wanted to take, but I'm going to pass because I'm fully invested. And I got basically 4 signals. I got one in TMF. Going to pass on only because if you look at this stock, while it does get a lot of signals off the 50-day moving average, it doesn't necessarily go that far very smoothly before like violating. So it's a good signal, but I have better potential money-making opportunities out there. So TMF is going to be a pass due to lack of capital. Also, EW would have been a long signal, but I've studied this chart going back, and I've looked at all the pocket pivot point signals that come from an extended price move above the 50-200-day moving average, and I've ruled EW out, which is going to leave me with 2 new long positions. But before I do that, I want to go through the buy stop that executed intraday today. WAGE, I posted it 2 weekends in a row on StockTwits and Twitter. Put my buy stops just above 61.41 here on the 11.11 high. Intraday, it was hit, pulled back, but rallied near the end of the day. Great signal here. If you're not already long WAGE, you can now. Because of the fill size, I got filled, I believe, like around 61.45, and after commissions and everything, I think my average is 61.47. So if you go long on an end-of-day signal here, you're going to be, if you get long at 61.49, you'll be getting long basically where my average price is following commissions. So WAGE is a 2.5% long signal if you were not already long WAGE. TNET is a 2.5% long signal as it breaks out of a nice ascending IPO base. You can see that it already broke out of one base here. Now it's really kind of creating a base. It's not a, you can't call this a cup with high handle pattern first off because it's extended way too high above that last pivot point in August to be considered now a handle. But it is a mini base on top of a base. I would call it a mini short stroke pattern on top of a larger cup pattern. But TNET, pocket pivot point signal, new long signal. Our line in the sand is quite clear. You can use the low day 31.17 here, and your ultimate final cut loss is obviously going to be a close below 30.61. So line in the sand is clearly drawn there. Also another IPO giving me a long signal, TWOU. This is one I was watching before earnings. Following earnings, it had kind of a rough reaction, closing below the 50-day moving average, but the very next day, it retook its 50-day moving average, and it closed above its 17.21 open on 11.17, refixing the pattern, and now we have a pocket pivot point buy signal off the uptrending 50-day moving average on a volume surge and a BOP surge. If BOP would have surged to max green BOP, I would have put the majority of my new long position in TNET into TWOU, and TNET would have been like 1%, TWOU would have been like 4% basically. TNET 1%, TWOU 4% is what it would have been if it would have been a max green BOP move with the price and volume. As it is, 2.5 on those. And also intraday, I had sell stops hit on ENTA. By the end of the day, remember what I've said. If you get an intraday sell stop hit, and then by the end of the day you've been proven wrong, you put that trade back on, even if it costs you. ENTA cost me. The last sell stop was at 41.61, got executed around 41.60, obviously. Rallies all the way back to 45.21. Going to add back those shares. Also, Tesla intraday moved below my long signal date of 242 when it hit 241.99. My intraday sell stop executed, and I was fully taken out of Tesla after our 50% sell in the morning where we got a good fill on. With it now closing higher than where it opened, it now negates that sell signal from the day before, so we have to put on the intraday sell stop that got hit today back on. So Tesla putting back on, and you hopefully are still long. ENTA putting back on. Hopefully you're not still long, because at one point this thing got to 40.30 and it could have kept going down, so I don't care that my sell stop was hit. But then the new longs, WAGE, if you were not already long, TNET, and then TWOU. There's only one partial sell, 25% sell position LNG, only because it's closing back below the 50-day moving average. And I split my order since it was gapping up in the morning between market and limit. Limit obviously was at 74.76, but I got a market order fill around the highs of like 76.60. Something like that. Almost 76.45, but it was like 76.60. So the closing below the 50-day moving average, 25% comes off, and I raised my sell stops. Low a day here for one of them, and then the low a day of 68.76 for the other sell stop. As for the market overall, I know we're ending it with it, which is quite weird, but everything looks good. Even though volume was lower than on Friday and lower than any day the past week, it was still overall healthy for a holiday shortened week. And overall, there is no complaints. I want to go ahead. Hold on. Let me throw up the Russell 2000. Whoa. Show the stochastics on that one. We continue to work off overbought conditions. As you can see, the NASDAQ continues to work off the overbought conditions on the stochastics, but we're still way up there. Remember, when you rally in an overbought market, that's bullish, not bearish. New York Stock Exchange, S&P 500, same thing. We're working off those overbought conditions, but we are still overbought. So it's still dangerous going long. Hence why new long position is still 2.5%. But I'm fully maxed out on capital, margin, and cash account. Obviously, with margin, the more you make, you get more buying power. But I treat that account basically with my IRA. And if my IRA says I'm fully invested, then that means that I trade very small no matter how much margin I have available in my margin account. Once again, I might have been doing this for over 16 or 18 years, 1998 to 2014, 16 years. 98 to yeah, overall, but margin still confuses me a little bit. What are you going to do? Can't master everything. Aloha.